Hello everyone, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of April 22nd. Each week go through the same process just to decide how aggressively I'm going to be deploying capital and looking at market health indicators, how the indexes are performing, how recent trades are performing, and yeah, it just gives us a sense of whether we want to be aggressive on the long side, the short side. And let's get to it. There's a couple watch lists you can check out. The best swing trading stocks watch list for April, that'll be getting updated shortly. And the current stocks watch list I haven't updated recently. And then you always have the best ETFs, or best performing ETFs, best performing stocks. There's sometimes some trade ideas in there. But these are the main ones I look at. And right now, we'll see, I'm not looking at any long trades. Simply because we have rolled over so much in the indices. Basically everything dropping. This is the NASDAQ 100. This is the NYSE Composite. This is the Russell 2000. This is the S&P 500. This is the Canadian market. So all of them rolling over pretty hard to the downside. And just kind of one additional little thing I look at is we can see on the way up we had some pretty minor declines in the S&P, pretty minor declines in the NYSE Composite, a little bit bigger one there in NYSE, but what we're seeing now is bigger than all of that. So as soon as we see a bigger decline than what we've seen in an already fairly long uptrend or a fairly extended uptrend, that's usually a warning sign to stay away for a while because it's going to be choppier to the downside. So not looking at any longs right now. Bitcoin and gold, a little bit different story. We have some kind of segments of the market here which are doing okay. So Bitcoin still in this big long-term uptrend from late 2023. This green line is the prior high. It was 69,000-ish, depending on which broker you use or exchange. And it's just been kind of whipsawing around that level, and this, we've talked about it for weeks now, months now. This is a pretty common thing to happen where it whipsaws around the old high. It has usually eventually moved higher. We did get a little false breakout recently below that recent low, and so maybe that's enough of a catalyst, or we might get that flush out below 59,000. There's this other little low on the day that we hit 69,000. We had a big pullback. So still kind of hanging out in that area, but overall, Bitcoin actually holding up quite well, given the historical context and just this overall pattern. Gold had this big sell-off that was, I believe, April 12th, so a couple Fridays ago, and bounced back, and it's holding okay. GDX, same thing, this big sell-off, and has bounced back a bit. I like these little, bullish patterns here. So we'll see if another one sets up. But yeah, this was a little bit volatile of a move for me to really like at the moment. But gold looks a little bit better. So if gold keeps going up, maybe we'll get GDX going up with it, which is what we always want. We want these two moving together. Let's look at the market health indicators. These tell us what's going on under the hood of the market. So this top one is the percentage of stocks above their 50-day moving average. The red line is the S&P 500 stocks. This turquoise line or blue line is all US stocks. And the 50-day moving average is just a crude measure of stocks in uptrends. And you can see we are below 50%, meaning less than half of stocks are above their 50-day moving average, which just generally is not an ideal time to be buying stocks. You can see when it's below, we tend to have choppy or downward trading. If it's hugging that line, we tend to be choppier. This one was hugging this line, choppier trading. And so ideally we want to be above this. That's going to be the easiest money environment. I like trading in easy money environments as opposed to trying to scrape out pennies in going long in stocks that are falling. For example, it's just not a good way to do it. So we want to be aggressive on the long side when it's easy money, and right now it would be hard money on the long side. It's going to be tough to make profits on the long side for swing trades. This is the volume, not important to me at the moment, rate of change. So this is simply the percentage movements of the S&P per day. And what we see is that during bear markets, we tend to get 2% sell-offs in a single day. And we haven't had that yet, but that doesn't mean we couldn't get one. We could accelerate into a big down day. But so far, similar to this kind of decline, which was a little bit more, uniform, or not a huge amount of selling, but it was just a steady, slow decline. We didn't get any of the big 2% drops. This was when the 2022, at the far left of the chart here, 2022 rally was just finishing up, and we started rallying. You can still see we still had lots of those 2% down days because price action's still choppy. Right now we're still relatively sedate. That's a good thing. So far indicates that this just could be a minor correction, but if we start getting those 2% drops, that indicates bigger problems. The NYSE advanced decline line, I would call this neutral, but it actually has flattened out the last few days while the S&P 500 has declined. So that's actually a fairly positive thing, but given the state of, the other indicators, would not be something positive enough to act on the long side. We're still overall, we have indicators in poor shape, so don't like the longs. On the 12th, we had a 90% downside volume day, so that's what this is measuring, upside volume or downside volume, basically how much of the volume that occurred on a day occurred in stocks that moved higher or lower on that day. And when you have an extreme value such as 90% upside volume, that shows huge buying enthusiasm coming in. If you have 10% or less, that means 90% of the volume was to the downside. That shows extreme volume and pessimism and selling coming in. And on April 12th, we had a 10% day, or maybe even 9%. So it was extreme selling, and it just tells us that was our last signal on this indicator, tells us to be wary. And since then, we have continued to decline on the indices. So that's basically tells us something that not great to be long. Sectors on the move, nothing stands out on the long side. You could try to find a strong point in here, but there's really not. I don't really focus on utilities or consumer defensive because they don't move very much. I'm not interested in swing trading them. So everything else, very weak. Maybe energy over the last month is up a little bit, but was down last week as well. So you could maybe try to find some strong points, but really nothing stands out for the longs. If you're looking to go short, well, you have lots of choices there for sectors that are in the red. So what am I doing right now? No long trades, short trades are always an option. Bitcoin still liking overall in terms of its overall uptrend. Possibly gold-related stocks and ETFs, they're addressed separately because you can have these commodity-related or sector-related things that do well despite the overall indices doing poorly. And right now, gold looking okay. The minor ETFs, as we mentioned, a little bit fuzzy. I'd want to see a little bit more buying interest coming into that before getting involved again. But that's your market outlook for this week. Have a great trading week out there.